Hey miners, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are pleased to welcome Ben Gagnon back to the channel. He's the CEO of Bitfarms. There's been a number of key developments since our last interview and a lot to talk about in today's presentation. Now, before we get into that, please take a second, smash the like button, you guys. Big help to myself and the channel, especially in getting this content out to other people like you who may find value. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below if you're currently holding shares of Bitfarms, what you thought about these recent developments, and your outlook into next year. Now, with that being said, let's get into today's interview. Okay, guys, so that's right. Today's interview, highly anticipated. We've welcomed back the CEO of Bitfarms, Mr. Ben Gagnon, to the channel. We've got a number of key updates since our last interview to go through in today's presentation. Super excited to have you on the channel, and thank you so much for taking the time today, Ben.
Yeah, thanks, Bryce and Anthony. Always good to be here.
Likewise. So first and foremost, we actually did a poll of what are people most interested in hearing about, Ben, and the list was long, I'll tell you that. So first topic of interest, obviously the big announcement this week in relation to RIOT platforms. So this saga has really been going on for quite some time. We've been covering both sides of this situation and coming up with a settlement here. We covered this on Monday's podcast, but we're eager to get your thoughts on the situation and this most recent update in terms of RIOT.
Yeah, I mean, it's a good question. I'm sure it's top of the list for most shareholders. What does this mean for shareholders? How did this come about? I mean, really, this came about because we have been trying to be constructive for many months with RIOT and all the other parties who are interested in looking at us. And to be quite frank, we're a very different company than we were even 6 months ago or 12 months ago. So we've continued to execute and grow and expand the team and our opportunities in the meantime. And really, I think a lot of the changes that RIOT was seeking in their initial proposal, they've accomplished. And at this point, you have to reevaluate the math and you have to start thinking about what is the best way forward in, kind of a chess set where a lot of the pieces have moved around since you first started, making your moves. And I think for both parties, this is the best result that was available. This is a good win for both sides. This enables both companies to basically save the resources, refocus their dedication and attention on growing and operating their own respective businesses, and saves us from a very costly and timely proxy fight where both sides were going to have to go after each other quite aggressively. I think this way we can both work together. I think everyone in the industry gets further along by working together, and it's quite amicable. This is a simple solution here to what has been a 6-month kind of saga, as I think a lot of people have put off. And really, it has resulted in a kind of the best course forward for both parties where we both stand today, just enabling us to focus on our respective growth. For the immediate short future, nothing really changes for shareholders. We are still going to have a special shareholders meeting, but the special shareholders meeting will look different than how it was originally announced. Effectively, RIOT has agreed to support all of the initiatives that we've laid out in the press release together, which basically means they're getting 1 seat on Bitfarms board. We're going to be voting to increase the board up to 6, and the newly reconstituted board will determine and nominate the 6th board member. So this is, good result, I think, on all sides. RIOT gets representation as our largest shareholder. We've doubled our institutional investor ownership with RIOT being on board. We can all move forward.
So that, it's good news all around, like you say, Ben. A couple of things. On the recent appointment of Amy, was that a joint decision with RIOT, or was that something that you put forward and they sort of like agreed that was for them an independent director?
I mean, Amy was always the board director that RIOT had put forward, and in the settlement process, obviously both sides need to have some victory, and both sides needs to have a little bit of pain, in order for a negotiation to be fair and just. And I think that's exactly, the result here. Both sides got a little bit of what they were looking for and asking for. And, both sides got a little bit, had to accept a few things that they weren't otherwise, wanting to accept at the beginning. But, we are always open to expanding the board. Amy has a bunch of great experience in terms of being a board director in numerous companies. She specifically has a lot of experience with Canadian publicly traded companies, which has a lot of peculiarities and unique differences from being a United States company. And so we think that she's going to be a good addition to the board and bring a lot of valuable insights.
Awesome. And from RIOT's perspective, I mean, obviously now there's an agreement now, a standstill, but I mean, if for instance, they wanted to submit another offer in the future, is there anything withholding them from doing that in a more friendly way than maybe they tried initially?
There's nothing preventing them from trying again with another offer. The standstill effectively means that they're agreeing not to go past the 19.9 position in the company. They're happy with that position, and they're not going to try and extend past that. The only ways past that would be to make a formal offer.
Yeah. Okay. No, that's fine. So obviously, since we've last met, which was not too long ago, you've actually gone and yourselves and purchased a miner in terms of stronghold mining.
Yes.
Can you tell us? I mean, obviously, I read into it. This has been a long, ongoing process. Can you tell me how much you were involved in that process, and what attracted you to Stronghold? Bear in mind, this has been going on for a long time.
Yeah, I mean, I first flew out there after Bitcoin Miami 2021, and I saw Stronghold before they were even public. So really the conversations around us merging with Stronghold happened before they even became a public miner. They were still private at the time. And what I saw there was a tremendous opportunity and tremendous potential. But I also saw a team that was relatively new on the Bitcoin mining side of things, and were, putting a lot of trust into the Minerva miners. And those were concerning areas for us. But it doesn't mean that the core assets were not very attractive and very interesting and having high potential. We have been a vertically integrated operating company for many years. And the one area of our stack where we can still climb further up the ladder, that makes a lot of sense, is on the energy generation side. And so there are very few assets that we've seen and we've identified where you have the ability to improve your impact on the environment. You have the ability to generate your own power and bring cost of power under your own control as a company. Have this massive opportunity here to leverage the infrastructure footprint in order to do both grid and energy production, in order to manage a much better load more cost effectively. And have a team here that's already familiar with Bitcoin miners and has a lot of that technical know-how between connecting a plant and the operating efficiency and the frequencies that the turbine is running at with the actual load of the Bitcoin mining, which is quite a unique concept. So we understood very early that these assets have a lot of potential. We just think that the potential's never really been fully utilized and fully developed. And I think there's a lot of reasons for that. I think, first and foremost is, when Stronghold RTO, they did it 3 weeks before the previous all-time high in 2021. It was end of October, and we hit all-time high price November 2021. And since that point, it has been really, really challenging to raise capital because every single month, every single quarter, Bitcoin price is lower, your stock price is lower, and all that money that you raised at the beginning, you put into these Minerva miners. And by the time that you understand, hey, the Minervas are not actually going to deliver as contracted, as promised. You now have Luna fiasco happening in mid 2022. And it really was a series of very unfortunately timed events kind of cascading on a company that was really just trying to get its foot in the door with Bitcoin mining. But the core assets are fantastic. And we've always known that. We've always understood that. We hired consultants back in 2022 to start looking at the plans and the market. We actually found a lot of the same engineers who built and designed the power plants back in the 80s and the early 90s. And we got them to teach us about the power plants and the unique design of the CFBs and the environmental purpose that they serve. And it got us even more excited. 2023, we were really focused on really shoring up our balance sheet and getting ourselves back ready. And so you look back on a series of events, we've always been looking at Stronghold. We've always been engaging with them and trying to understand the opportunity and the assets better. But it really wasn't until, a couple months ago where the stars aligned and, they were going through a process of, strategic alternatives review. And, we've been looking at buying them for a long time. And now there's a lot of other people coming into this bidding process and making it a lot more competitive. We have the opportunity to either rebalance our portfolio and expand massively in the United States, or maybe miss out on this opportunity that we spent the last 3 years working to understand and develop. And so I think really the stars aligned on that one. The synergies there are tremendous. And the thing that I've been talking about since I joined in the CEO role is that we need to focus on diversifying away from Bitcoin mining or beyond Bitcoin mining to make us better Bitcoin miners. And getting into the energy generation, getting into the energy trading really is a big part of that. And so with this one transaction, we were able to rebalance our entire focus towards the United States market. We were able to vertically integrate in with 2 strategically located power plants. We have the opportunity now to do energy trading and manage our cost of energy through the operation of these plants in a way we've never really had before with our kind of tariff-based grid programs. We tap into a massive opportunity here for this merged HPC AI Bitcoin data center combination, which we think starts to give us a much more compelling strategic advantage over other companies who are looking to do HPC and AI or Bitcoin in a way that's very pragmatic and realistic. So this was a wonderful transaction, very strategic, very creative across numerous fronts. And I think we're all very, very excited for it on both sides.
I mean, personally, Stronghold was probably one of the first articles I wrote for Compass Mining back in 2022, because I looked at what they were doing in terms of redeveloping these waste coal sites and turning them green again. So it was a great story to highlight that, there was some good news in the Bitcoin mining space, rather than all the FUD we'd been seeing constantly on a daily basis. Obviously, the chief executive earlier this year basically told the world that the company was up for sale and offers, and that's probably not far away from when you started taking things a bit more seriously. Are you able to talk about sort of like the cost? I think 175 million, which includes taking on the debt that they've got. Yep. In terms of like a premium, how on based on like share prices, what sort of a premium when you got to the position where you agreed? What was the premium for Stronghold Mining? Were you able to articulate on that?
Yeah, so we looked at Stronghold in a couple of different scenarios. We looked at it just as like an asset purchase, and we looked at it as a whole company transaction. And when Stronghold was going through the strategic alternatives review process, they did have bidders for kind of both structures. But really, you can't unlock the full value of those sites if you chop them up into pieces. You need to be able to operate them holistically as one owner and start integrating in like the efficiencies of the mining operations back into the power plant. You need to be able to tap into the substation as well as the power plant in order to double the footprint. So, we quickly focused our efforts on Holco versus the assets themselves. And you look at things in kind of two frames of reference. You look at what they have immediately there in terms of their operating capacity. You look at what's there in the short term capacity in terms of like what could they do in 2025, and you look at it in terms of the long multi-year runway. And what we have here is we've got 307 megawatts that are available for 2025, and that includes the power that we get from the grid and we can do energy trading with. It includes the power that we generate directly from the power plant itself. And so here's a pipeline of 307 megawatts that we can do energy trading with and are expected to reduce our average cost of power across our portfolio in a very, very meaningful way, with very minimal upfront CapEx costs associated with building out the remaining capacity, because it's all there in terms of the high voltage and medium voltage equipment. And so it becomes very strategic on the 307. Then you add into it the sweetener that there is, around all of the upgrade potentials on that site. So the two sites combined have an additional, I think it's 648 megawatts of expansion capacity at those grids. So the substations that they're on and the long distance transmission lines that they're utilizing are very strategically located. And with minor improvements, 1 mile worth of transmission line here or a T-junction there, and you can start getting significant capacity upgrades. And so we have not only 307 immediate, megawatts for next year, which reduce our average cost of power across our portfolio, which we think the premium, is justified on the 307, but you already have as well all of the potential to continue growing this organically over multiple years. And so for us, this became a very, very strategic way for us to shift our focus and on the United States, secure a multi-year path for us to get greater and greater levels of control over our technology with ticking all of those diversification buckets that I mentioned. There's also a lot of, cooler, nerdier things that we can do by integrating the Bitcoin mines into the power plants themselves in order to improve the energy efficiency and the operating efficiency of the plants that we're really excited. I was actually just out there about 2 weeks ago on site, meeting with the teams, meeting with the plant managers, walking through the ideas about what we can do in order to improve operating efficiencies. And some of these things are low-hanging fruit. It's like reutilizing the heat from the miners to make sure that the fuel is dry prior to it going into the burner has massive benefits. Preheating the air before it goes into the facility and then goes into the turbine has massive benefits. Preheating the water that you're pulling out in order to put it into the turbine and preheating it up to 80 degrees Celsius from the 20 degrees ambient has massive potential. And so, we have the ability here to not only take over a site with massive value add right now, but also create what I think is going to be the world's first, combined cycle Bitcoin mining power plant, which really is going to help us drive energy efficiencies and improve our overall cost of power there even more. Normally, these aren't things that you would do because you wouldn't want to make the investments into the heat. But when we're already utilizing that energy for the Bitcoin mining, and we can just repurpose that heat in a very cost-effective way. This has very material benefits in terms of reducing our average cost of power across our portfolio.
And I'm hoping reheating the indoor swimming pool there as well. That'll be a benefit, won't it?
There's no indoor swimming pools.
No private jets, anything like that.
There's none of that. We will be heating. We'll be heating. We're looking at what we can do in terms of integrating the heat. Heating the ancillary buildings and the office buildings is definitely one of the smaller, lower hanging fruits that we'll do. But really, the industrial applications are around the pre-treatment of the fuel, heating of the crushing buildings, and making sure that some of the buildings that might freeze over in the wintertime, stay warm enough that they don't freeze over. And you can continue to utilize that equipment and get a much more predictable, operating efficiency and lower costs out of the plant. So we're really excited about that. All of our team is very excited about that. We have Benoit, our new Chief Infrastructure Officer, as well as Alex, Brammer, who's our new head of global mining operations, out there on site with me in order to work through with the teams and make sure everybody knows each other, hand out some Bitfarms, t-shirts and hoodies and stuff, and move things forward. And we've identified a lot of opportunities there over the years, and we're very, very excited about moving forward.
Yeah, you answered part of my next question, which was about the potential for expansion. So that was well articulated in your last response. But in terms of, obviously, before the deal was done, I'm assuming your engineers were down there to check on the actual assets that you were purchasing and the in what condition they were, and effectively
We've done numerous
consistent power in the space. And so I mean, from that perspective, you were more than happy as a company, done your due diligence effectively.
We've done numerous site visits down there over the last 3 years. We did a bunch more this year. We've re-engaged the same consultants that we engaged back in 2022 to update their report and give us, the third-party assessment of the power plants themselves. We worked with several advisors in terms of structuring the deal and making sure that the deal was fair. And the premium is justified, making sure that our bid was competitive across the process. I think there was 4 to 5 other bidders in the bidding room with us. So there was a lot of interest in these power plants from publics, from privates, from miners, from I think non-mining companies who are interested in the power. But no, at the end of the day, I think we just beat everyone else out, and I think the Stronghold team really prefers Bitfarms paper going into a bull market over, let's say, cash, or something else.
From a time frame perspective, obviously it needs to get ratified by a shareholder, but when do you see sort of like the end game as Stronghold being part of the Bitfarm family?
So we're still anticipating closing in Q1. So, we've got a few months before we'd anticipated being fully closed. In terms of, working with them and actually having everything fully integrated into Bitfarms, it's going to take a lot longer than Q1. Effectively for the first, foreseeable future after the deal closes, we're just going to be run as 2 separate companies. And, piece by piece, we're going to start integrating in Stronghold into the Bitfarms family. But it's not as if, we close on, say, March 1st and March 2nd, there's a huge change in the operation of those sites or those plants or those teams. All the operational staff remains. We're not looking to make a bunch of changes there. We're looking to make a bunch of investments there. And so that doesn't mean getting rid of the teams. It means expanding upon the teams and bringing more people in order to really build those sites up to their full capacity.
I was fortunate in Nashville to meet the Block team, as they've now joined the RIOT team effectively, and I'm assuming the same will occur with the Stronghold team there. They'll just form part of the Bitfarms family and just integrate as time goes by. Then to be under that one umbrella, or are you expecting change to happen in terms of manpower?
Everybody is expected to kind of get folded into the Bitfarms umbrella. Especially all the operational staff, it's all going to get folded in. And there's a lot of work to be done there before we have a very, very crystallized plan of how things are going to get folded in and when, and what's the proper order, and what are all the various milestones. That's still going to be a bit of a process. We have our Liam Wilson, who's our COO, is leading up the integration with the Stronghold team. And so, he's going to be our main point man who's working on forcing, the changes in the operational structure there and making sure that it's all part of one consistent, cohesive company organization, and porting over our operational skills, our operational insights, our systems, our data collection, our analysis. All of that needs to get ported over, but it's going to happen, piecemeal over time.
Phenomenal. Now, Ben, it's interesting you bring up the heat recovery, because that's actually the panel that I'm hosting in Amsterdam next week, talking about the next frontier in heat recovery as a byproduct of Bitcoin mining. So very interesting stuff, right on the leading edge here. Now, the other thing you talk about in terms of synergies or strategy that you can share between these two companies came out in another press release talking about actually hosting 10,000 T21 miners at stronghold facilities that were originally destined for South America. So obviously this is a great timing advantage. You've got these facilities. These are brand new, top of the line miners. You're able to get them hashing quicker. My question here is this purely a timing move, or was there a concern or any wavering kind of clarity, I guess, on South America, or was this just an opportunity that presented itself and you guys took advantage of?
So this is an opportunity to accelerate the deployment of about 10,000 miners that otherwise probably were not going to get deployed until December. And so we can get those deployed and start hashing and start earning their payback on them about 3 months earlier. It also means that, as we're working through the upgrade plans around Stronghold, we can already start improving the optimization and performance of those sites so that when the deal does close, anticipated in Q1 of next year, we're not inheriting something that we need to replace every miner on. And, we've already done a lot of that groundwork in place and captured some of those economics out of that faster deployment. So, really nothing more to read into it on that. I mean, we're not diversifying away from Paraguay. We're still continuing to build out in LATAM. I'm in Paraguay right now at our Paso Pe location, overseeing some of the changes that we're making here and the deployments on the T21. And we're going to continue building out on Iguazu, and we're still planning on deploying, 100 megawatts worth of T21s there. Really, this was just an optimization and acceleration in the inventory shipment schedules so that we can get them online, hashing faster and earlier.
Makes sense. And I was actually going to ask for a construction update on Paraguay. I know you're on site there, Ben. You actually were able to show us through your window there, the site. So I don't know if you're able to show the viewers or at the end of the video, but we'll get a snapshot of that. Speaking of on site in Paraguay, can you give us a quick construction update? Very busy. We keep seeing great images coming out of that location. The red clay gets me every time. I can't believe it. But moving along at a fast pace there, Ben, and you had actually alluded to this in one of our prior podcasts a few months ago, saying it's actually quite a bit faster to get a lot of the energy infrastructure, mining rigs, some of this stuff up and operational in South America as opposed to the US.
Yeah, it's a lot faster to do build outs here. A part of that is regulatory, because the process here is a bit more streamlined. They've wanted large industrial users of power to come in, and so they were very much facilitating of that process. But a lot of it too is the workforce here is very eager to work. This isn't a workforce that necessarily wants to be doing a 30-hour work week. They want to put in their hours. They want to do overtime. They want to make sure that they're making as much as possible, and so they're very eager to work, and we're able to get a lot of things done very, very quickly here. When we built our Villa Rica site, which was our first 10 megawatts in Paraguay, that was our lowest cost per megawatt build out of anything we've ever done, and we did it in 3 months, right? From signing to operational and actively hashing, it was 3 months. That was putting up a building, bringing in the transformers, digging the trenches for the conduits, laying down all the wires, building in all of the ventilation system. Like, it was 3 months. What we're doing here in Paraguay is also incredibly fast. We're doing about 9 to 10 months. We are, going from a site which is trees or a soy field and leveling it, making sure the ground is ready, putting up buildings, building out a substation, doing all the interconnection work, and doing it in about 8 or 9 months. That's easily a process that would take you, with the substation construction, 18 months in the United States. So we've almost cut that timeline in half, which for us is very important. And it was a big reason for why we went out to Paraguay in the first place. Here was an area where we were able to get huge amounts of cost-effective renewable hydropower. We're able to build out with a time frame that would enable us to deploy our miners ahead of the Bitcoin bull run, which we anticipated, in order to make sure that we were in place and we were able to capture the most out of the mining economics from the T21s. The last thing you want is to, buy miners and wait 2 years to deploy them and just miss the entire bull run, right? The timelined execution is what you're seeing as being the biggest value driver in, I think, a lot of the HPC and AI conversations is how fast can you get this equipment online? And Bitcoin mining is not a different game. A lot of this happens with how fast do you get things online. And we're able to build out very quickly in Paraguay.
Makes sense. Now I have one more follow-up question, then I'll pass it to Anthony to cover the HPC section. So we noticed, Ben, we made a joke last time you were on about backfilling your position as the chief mining officer, your big shoes to fill. It looks as though you've now kind of separated the roles into mining and then infrastructure component. So Anthony and I thought that probably supports kind of the evolution of the business and starting to look at other infrastructure uses outside of mining. But we wanted to get your take specifically on the structural change and what this enables your company to do now.
No, it absolutely right. When we first started expanding outside of Quebec, we really did take a step back at our management structure and look at how to manage a growing international portfolio. And so a lot of our management systems and a lot of our reporting structure was very Quebec centric, and there was too much responsibilities and oversight in too few hands. And they were getting to be jack of all trades as opposed to specialists in their field of expertise, right? I don't want to have 10 people who are all good at everything. I want to have 10 experts who are the best as it possibly can be in the world at doing that one thing, right? And then having a team of those A players who are going to be able to execute for us. And so, when I joined up into the CEO role, this is one of the things that I've identified for a long time is understanding as we've grown the business, what have been the challenges with managing that growing scale and what are the potential solutions for developing a management model, which is a lot more traditional and is a lot more scalable across multiple regions, multiple projects, multiple different languages and jurisdictions. How do we create that foundation for us to continue this international portfolio growth? And really, it came down to better understanding how we make people highly specific and efficient at doing what they're best at doing and getting the most performance out of them. And so that means basically we're splitting out infrastructure and maintenance. And to think about this really simply, infrastructure and mining. Think about it really simply. Basically, anything that is not the miner and hash rate belongs in the infrastructure group. Anything that is the miner and is hash rate is now the mining operations group. And so we take our staff, which is split across replacing filters and diagnosing, HVAC facility, fan issues, or maybe doing some janitorial work and have them purely focused on miners and hash rate and uptime all the time, every second of the day, every block of the day. That's all they're focusing on is hash rate. And then everything else falls under the infrastructure group. And that means that the people who are best at the construction and the management of all of the external vendors, the maintenance of the facilities, the procurement of all of the, supply parts and replacement parts, like it's all being managed under one house. And there's one person of accountability, for each separate thing. So anything that's supporting a miner goes in infrastructure group. Anything that is a miner is in the mining group. And, keep it simple. If it's a miner fan, that's a mining group problem. If it's a building fan, that's an infrastructure group problem.
Got it.
And by separating those two out, not only does that give us a better, more manageable management structure for overseeing the business and overseeing this growing international portfolio, but it also gives us the foundation to build an HPCI vertical alongside the mining operations vertical. The HPCI operations are going to be very fundamentally different from the Bitcoin mining operations. It's different infrastructure, it's different software, it's different management practices, it's different kind of uptime that you're aiming for. And so what we wanted to do is we wanted to make sure that all of the expertise and skills for supporting a data center operation, whether that be a Bitcoin mining data center or an HPCI data center, is focused on just doing that, the construction, the maintenance. And then we have our operations team, which are focused on uptime and performance of the data centers themselves. And we think this is a very exciting change. It brings a lot of positive developments to the company. We've been, hiring some fantastic people. We pulled Alex, Brammer out from another site in Pennsylvania. He's very familiar with BJM. And the entire team is I think very energized around a lot of these changes that we're implementing.
Obviously the conversation, and we spoke to many of the Wall Street guys in the last few months. We met a lot of them at Dallas in June when we visited Denton and Corsicana, and then again at Nashville. And to be honest, the conversation I was having with these analysts from Wall Street was really about HPC. There wasn't even really remote interest in the Bitcoin mining side of it. And I know all these analysts support all the companies, so directly to your face will say, we're right behind you, Ben. But, HPC seems to be the conversation that's currently happening. And if you look back to the 3rd of June, when Core Scientific announced that HPC hosting deal, the original deal, the 200 megawatt deal with CoreWeave, and look at how the market has judged miners since then, and also the fact we had Patrick Fleury on the channel just over a month ago, and he gave an update to say, we're not raising our hash rate next year in Bitcoin mining. And we were like, what? They're focused on HPC. Their share prices have gone up 150% since the 3rd of June. All the pure play miners, the ones that weren't interested in HPC, their share prices are lower than where they were on the 3rd of June. All the HPC interested miners are sort of like, have been given a premium. Even the likes of Hut and Hive and Iron are above the line, even though Bitcoin has dropped 7% since the 3rd of June. So in normality, you'd expect the miners to follow that trend and be lower. But those that have suggested they want to go big into HPC have been given an immediate premium for that. You're now starting to include HPC in your discussions. You've employed more people. I'm assuming a lot of your conversations now are about potential in the HPC space moving forward. We just seen the likes of Cypher yesterday announce their finalization for their purchase of a 300 megawatt site, which they'll roll out, I'm going to assume, HPC, because they've got Black Pearl site to get their hash rate next year to where it needs to go to. And now it looks like there's only 2 companies that aren't even remotely interested in HPC at the moment. That's RIOT and CleanSpark. And we have Jason on the podcast next week, and maybe he's got a week to change his mind, because I think the pressure on miners, and I really believe that. I think there's been a little bit of pressure on miners to sort of like get on board, because this is happening now, and it's just a case of, are you seeing that sort of conversation more apparent with the HPC side than the Bitcoin mining side?
We've had no shortage of interest on the HPC and AI side, and it's definitely something that we've spent a lot of time looking at and evaluating and building up the strength in our team. I think the fundamental reality with HPC and AI is just that these are 2 very, very different, businesses. They're very, very different infrastructure. It's very, very different software stacks, and it's very, very different CapEx obligations. And when we're looking at how do we get the best utilization and value out of our energy portfolio, you look at the revenues that HPC is possible of generating, and you say, well, obviously this makes a very, very meaningful part in terms of driving up our average revenue per megawatt hour way up, if you include some HPC and AI. But we're also trying to balance out the return on invested capital. And the challenge here is that if you're getting into a business space, which is even more capitally intensive than Bitcoin mining is, and everybody admits and knows that Bitcoin is very capitally intensive, and you're competing against the Googles and the Microsofts of the world who have a 2% cost of power as opposed to a a 30% cost of, sorry, a 2% cost of capital as opposed to a 30% cost of capital for a lot of the public miners, and you don't really bring any sort of strategic advantage to the table, then it's hard to understand why you're going to be successful in that space. So I think there's a big difference between miners who are taking a pragmatic and realistic approach to how do you bring this in and incorporate it into your portfolio, and other miners who are just looking for the press release necessarily, like to go out there and bring this in, like to do it, in a smart, practical way. The first thing that you're going to do is you're probably going to build out a 1 megawatt, pilot project, right? And you're going to keep it small. You're going to keep the CapEx constrained. You're going to try and learn from it, and you're going to try and carve out a competitive advantage. And I think that's kind of where we're at is how do we integrate the first pilot program of HPC so that we can learn in a much more cost-effective and speedy way before we're making those major capital investment decisions. The second thing is that, we've identified a strategy and a structure with the Stronghold acquisition, which we think gives us a competitive advantage on cost. And if we don't have a competitive advantage on our cost of capital and we don't have a competitive advantage on cost, then, we're not going to be able to perform in this industry. If we have a competitive advantage on one of those things, and we should be able to carve out a space for ourselves. So that's what we've done with those stronghold sites. The cost of power or the cost to build out the infrastructure is very much focused on the reliability that you're getting out of the data center. And it's very much like the 80-20 rule. You can get 80% of the uptime for 20% of the cost. But when you start wanting to add on an additional 15% uptime, it starts costing you a lot more than 15%. Right. And you want to start adding on the remaining 4.9% or the additional 0.99% on top of that. That's when those costs become really exponential. And what we've identified here with the Stronghold assets is the ability to bypass the most useless and most expensive line item in an HPC build, which is the diesel gensets or the battery storage for that redundant source of power. By having the ability to have a grid connection and a power plant on site, we've already mitigated the whole cost of the diesel gensets because we already have energy generation on site, right? So we have two sources of power that can go into this data center and give us a massive cost advantage over, going on site, bringing in and building out that energy generation yourself, doing it with diesel, spending millions of dollars per megawatt, operating them for 15 to 20 cents per kilowatt hour, and, doing it 0.1% of the year. We can get a much, much better site. And I think that's, the Bitfarms approach has always been not growing for growth's sake, but growing because it's going to develop and going to be a meaningful contributor to our portfolio, going to have a powerful and compelling return on invested capital. And the only way that we can really achieve that is being competitive on one of those areas. And we think that we can do that with the Stronghold sites.
I get a sense of a slight, like a cautionist. I mean, we've only seen the one big deal. I mean, everyone's sort of anticipating we need another deal out there to make sure it's not a one-off. And we see what other miners are doing in HPC space, like you say, building that pilot or building smaller amounts of megawatt facilities and delivering their own sort of AI service or power for customers to come and use. That's quite an expensive strategy compared to the one that Core Scientific did. I think everyone's like thinking maybe we can jump on the HPC hosting, get some big hyperscalers to come in and sort of like give us some cash up front to refurb our facilities, let them bring their own GPUs in, let them negotiate energy costs and all that, and take the risk of that not being at 999 or whatever they require 3 nines or 5 nines, and we'll take all the revenue and margins from the deal. But we've seen the one big deal. I think there's just anticipation that we'll see more of this, and I think it's probably just the conversation that the interest across all the mining companies, apart from maybe just two of them, has been sort of like focus on this. But I actually am pleased that you're sort of like, you're taking a stance. It's like, well, let's see what happens in this space and we can start something maybe smaller. But actually, we've got quite a good position in terms of getting our costs down on the Bitcoin mining side, and we can have the competitive advantage in that particular model, which we've seen from the likes of Iron delivering their site at Childress. They're getting their costs down, hopefully going forward.
There's no energy efficiency that's ever going to save you from expensive power, right?
Yeah.
There's no level of energy efficiency that's going to do that. You much better focused on your cost of power, which is a lot more sticky than the efficiency, which is constantly shifting and moving around. It's kind of like a quicksand. If you're trying to compete on the highest energy efficiency, you're always going to be chasing the next model and the next model and the next model. If you're focusing on the cost efficiency of your power, you don't need to get in that game so much. And it's something that will have a lot longer term benefits is reducing your average cost of power.
Yeah, very interesting strategy and approach here from Bitfarms and the team. Now, we just have a couple minutes left, Ben. I have one more question for you before we get into wrap up here. Has to do with traditional self-mining targets. I know 12 exahash was the mile or goalpost kind of mid-year here, 21 exahash by the end of the year. We wanted to confirm the numbers and get a statement whether that's going to be plugged in or operational.
Yeah, so we're still moving towards the 12 and the 21. We're going to have our our September production report out on October 1st, next Tuesday. So we're going to have a little bit more insight in terms of where we ended the month. With the hash price that we're seeing right now at around 4 cents, a little bit, plus or minus from there, the margins have been relatively tight. And so even running the miners at full load is not actually the most optimal thing to do from a cash flow perspective. So we're evaluating all of those different scenarios right now. We're still on pace to hit our 21 at the end of the year because it's mostly associated with bringing on our Iguazu site as well as a few new facility constructions. We've had, a few problems with the 21 series as everyone has that we've been working through, and we're making good progress on that. But I think we're going to have, continued progress on our Iguazu site into December. We're still on track for that 21. And, right now what we're working on is how do we optimize our current portfolio? How do we ensure the highest probability of success towards that 21 and a proper facility launch date of Iguazu in December, as well as, what are the strategies for growing and continuing that momentum from 2024 into 2025? We haven't provided any guidance on 2025 other than the 35 exahash figure, which really doesn't have any, inter-year milestones associated with that. But we're working through those plans and those strategies right now. And we're going to have that out to the investors, obviously, before the end of the year so they can understand, where we're at, where we're going, short, medium, and the long term.
Excellent. Well, a fascinating interview once again. Anthony, I'll throw it back to you for any closing questions or thoughts, and then Ben will give you the mic to wrap things up here.
Yeah, I mean, it's good that you can, think about next year, later this year, and I'm assuming the Stronghold mining purchase will give you some capacity already for that to sort of to grow there, because I don't cover Stronghold in my numbers, but I'm assuming I remember when they bought the S19s in late 2021 because it was a newsworthy story when they paid a lot of dollars per terahash for those machines. But they'll be sort of like, in terms of efficiency, they'll be probably quite low down the efficiency level. So it may mean you can get optimum, like these T21s going in there, using up a lot more, getting a lot more exahash for your power that you've got available there to help you get the target towards next year.
Yeah, we've already, signed that hosting agreement, and the T21s that are going to be deployed there over the coming weeks, like those are the best miners that Stronghold has ever ran. It's, to be quite frank, they're the best miners that will have ever been, placed and operated in those facilities. We're looking at how do we optimize across the portfolio. We don't take the view that, just because we we had, you know, a plan rolling forward from 6 months ago that there's not going to be a way to optimize it as you work through the year. And that's what we identified here with moving forward on the Stronghold deployment. There's a lot more miners that need to be upgraded there on site. They've got a lot of kind of mid to high 30s energy efficiency miners. They've got some kind of low 30s. You know, and so there's plenty of room for upgrading those sites with a miner refresh in a cost-effective way that's really going to drive performance there. And we're having those conversations with all the manufacturers right now about miner purchasing and strategies around that. You know, I think what you can expect from Bitfarms is always to make sure that we're focusing on that return on invested capital and making sure that we're buying miners in a strategic way. We're not a company that's out there trying to, you know, spend every dollar that we can to buy the most efficient miner on market every time. We're out there trying to optimize around costs and revenues and profitability in order to deliver a better value for shareholders. And you can expect that we're going to be doing similar strategies around Stronghold. We have, you know, the 307 megawatts at Stronghold. We've got the second 100 megawatts at our Iguazu facility, which is coming online, you know, just months behind the first 100 megawatts. We've got the additional 90 megawatts at Sharon. I mean, it's over a half a gigawatt of pipeline that, you know, we have yet to fill out and announce our public strategies on. But trust me, it's been one of my priorities here is to formalize the strategies around next year. And we're making very good progress on that. And we're going to be very excited to announce those, you know, before year end.
Do you think it's good for the industry to have a number of new entrants to the markets in terms of providing ASIC miners? So we've seen the likes of Block are introducing new miners this year. We've got Auradine. We've got even our own Bitdeer as a mining company, which isn't a total shock when you consider where Bitdeer formed from. But is that from your perspective, is it good to have new entrants? Do you get to test any of these machines that they're producing to see if they would fit into the Bitfarms family? Or do you think actually there's a long way to go to catch up the likes of Bitmain, who are the biggest sort of supplier of ASIC miners in the market by a long way? And you have it looks like you have a good relationship with them because you've purchased many of your miner rigs from them. How do you see that? How do you see that market? And I think you alluded to the fact that you're not going all out on sort of like one miner because it might appear to the most efficient miner today.
No, it's always been our strategy that you don't want to buy the most efficient miner. You kind of want to buy like the 90th percentile is kind of, you know, what you're targeting. You just like you pay a lot, you know, when you're looking at that 80-20 rule and you want to go higher and higher up the ladder, you start paying exponentially more for each, you know, rung of the ladder you're climbing up. The same is true on the energy efficiency side of the miners. And so, you know, to go from the miner that's fourth most efficient in the industry to the miner that is the most efficient in the industry, you might end up spending 40 to 50% more per terahash. You might actually translate into, you know, 2.5 times more per unit because you're paying more per terahash. There's more terahash in the unit. You know, those increases in cost compound really quickly. If you've got to pay duties, you're now paying the duties on the higher unit price, right? So that's increasing your duty costs. Like there's a lot of things to factor in there. And generally speaking, I don't ever think it's worth paying the premium associated for the highest efficiency miners. You know, you're much better off focusing on lowering your energy costs than improving your energy efficiency. You know, from a return perspective. But, you know, I think having multiple manufacturers out there is always a good thing. That, you know, if you look at like Bitcoin mining, I think Bitcoin mining is probably the freest market on the planet. To have a monopoly controlling 90% of a key equipment, you know, supply chain is probably not the healthiest. It would imply that there isn't the free market economics going around. But I think that's always going to be subject to change when you look at, and I always say that Bitcoin mining, you look at it as maturity cycles in terms of the halving epochs. Over time, as the industry matures, so will the manufacturing, you know, industry and the the space that we're drawing from, you're not going to end up with, one company that has 100% supply and there's no other, alternatives out there. There's always going to be somebody who's kind of jostling for position, and that should improve costs across the market for everybody. So we're fully supportive of multiple manufacturers, and we're speaking with multiple manufacturers all the time. We test the vast majority of new Bitcoin mining models that come out onto market, so we understand where the manufacturers are at in terms of their production quality, their ability to produce a unit, their match on spec, what are the actual ratings versus what they say on the box, which can vary quite a lot. So, we're always looking at that. But what I would always draw down to is, because we're so focused on that return on invested capital, the other thing is that we don't want to unnecessarily risk our capital. And the miner purchases are very material, especially when you're doing large scale miner purchases for new mining equipment. The last thing that you want to do is allocate, $200 million to a mining manufacturer who's never deployed a working product at scale. Right. And so when it comes to large scale purchases, I think, Bitmain and MicroBT and to a lesser extent, Gagnon will, they have a very strong grasp of the market. It's hard to shake. It's very difficult for a new entry to come in and for it to secure a multi-$100 million order when it's never delivered itself before. This is very much like a show me space. This is not a space where you're like, oh, I'll just trust you and wire you the money. This is a space where it's like, you've got to verify that your product works before we actually have a deal here. And
we'll see how the block deal with Core Scientific goes when they roll out the 50 next time. So that was a sizable deal to put in place there. But Ben, it's great to ask you that question because you've still got your chief mining hat as well to talk to the answers on that one. So that's really great. Back to you, Bryce. Thank you.
Yeah, we'll let you wrap up here, Ben. I know we used a full hour. We covered a lot of ground here. Back to you for anything we missed, but greatly appreciate the time and congrats on all of the key milestones since our last meeting.
Yeah, thanks, guys. Just to wrap up, I think we're all very excited over here at Bitfarms. A lot has happened in the last couple of months, but we are moving forward very quickly, very aggressively. And all energized around, one goal right now. I think we are a very different company than we were 6-12 months ago, and we're moving forward at a speed which I've never seen in my 5 years here in the business. And it's very exciting. We were going to spend the next 2 months focused on a proxy fight matter. Now we can spend the next 2 months focused on, optimizing our portfolio, integrating the new team members in here, building out the HPC and AI team, building out the strategies for 2025, working on integration with Stronghold. We've got or working on closing the transaction with Stronghold, I should say. We've got a tremendous amount of opportunities for us to be working on and to create value for shareholders. And, now is the time to focus on doing just that. That's what we're going to do now.
And you've only been CEO a few months. Wait till you have a couple of years under your belt, Ben. We're here watching, waiting, ears and eyes open for each one of these milestones as you hit it. You guys, if you're still watching the video at this point, if you're invested in Bitfarms, leave a comment. Let us know what you think of this new strategy, these recent developments. Feel free to subscribe to the channel. That's all for now. We'll see you in our next video.